Hello everybody, I'm L.A. Little and this is a short video about the NeoTA charts, what they are, how they work, and how you use them. When you first come into the TA charts, you're going to see an empty screen. It's simply wanting you to put in some sort of a symbol for it to look up. If you put in a symbol it doesn't know, it will try to find it, and it will give you information about whether it can be added or not, depending on whether we carry that symbol or can. If you have a symbol, of course, that we do know, it's going to pop it up and show you the chart. So let's put in a symbol and hit the submit button, and up pops the chart. And in this case, I actually entered in a daily. We could do a weekly or a monthly, but we'll just start with the daily here and look it over first. So the first thing you're going to notice is that no matter what time frame you're looking at, all charts have 60 bars across them, whether it's a daily bar in this case, or if I reach up here and choose a weekly and submit it, I'll see 60 bars on the weekly. They're all the same. And the reason for that is we want to be able to treat all time frames the same in terms of trend and in terms of our timing, our direction and our timing. And so that leads us into the next thing, which is that's what the charts are about. If you think about trading, what you're interested in is both which way is it going to go and when should I get in or when should I get out. So is the stock going bullishly, right, higher? Is it going sideways? Or is it in fact going down? I typically want to trade in the direction of the prevailing trend on the time frame that I'm interested in. And so that's a mouthful, but essentially you want to trade in the direction of the trend. If it's going up, you want to be trading up. If it's going down, you want to be trading down. And that's true of the time frame that you're interested in. Now, not only do you want to trade the time frame, you want to know when to get in and when to get out. So once I know I'm going to be trading, say, bullishly, I want to know when I should get in. And when is that? Well, it's typically either on a breakout or a retrace, because there's really just two types of trade. One is you get some sort of a retrace and you try to buy that. Or two, like in this case, you get a breakout, so it breaks over the swing point high and you try to trade the breakout. So no matter which trade you're trying to attempt, the NeoTA charts allow you to better time that entry and that exit. So let's talk about direction and how that's constructed to begin with. You'll see two things on the chart. You're going to see these arrows. They're either going to be up, they're going to be sideways, or potentially down. There's not a down one on this one. We can switch to the daily and find one. Those are direction. They're telling you whether it's bullish, which is the case here, and the case in this one and that one, and sideways in this one. And a down arrow would of course be a bearish trend. They also have color. They have red and green. Red denotes a suspect breakout. In other words, it broke out over a prior swing point. That's how you get a trend transition. It broke out over a prior swing point and it didn't have as much volume. When it's green, like in this case, right, the volume associated with the bar that was broken out of compared to the bar that did the breaking, the volume was less over there and more over here. So we broke out with higher volume versus the swing point we broke out over. That denotes green. In other words, it's confirmed. Confirmed simply means that you have a slightly higher probability, anywhere from 2 to 4%, that the trend is going to continue longer than it would if it was suspect. That's the difference between the colors, the difference between trends. That's what we call trend qualification. So suspect, bullish, suspect sideways or confirmed sideways, and suspect, we do have I didn't see this one here. We actually do have a suspect bearish trend here on this time frame. And so you've got all three: bullish, bullish, sideways, bearish. Once you have those, you can use that knowledge to know which trend you want to trade. And in this particular case, for example, as long as this was all bullish, you would probably want to be trading bullishly, either on a retrace or on a breakout. Once it moved to sideways, then you have to stand aside or at least consider the possibility that trend may change. And in fact, it did here. Once it does, then you probably want to be trading in the direction of that trend. Vice versa, once it gets back over some sort of a swing point high, you would be doing the opposite. And so that's the general idea of trend. Once you know trend, right, then you can start you can start to think about where you want to trade in terms of timing. So let's tackle timing next. What you see on the charts in these areas, in this particular one, and in these green ones that you see here and here and farther down here, these are anchor support, the green, resistance, the red. What does it mean to be anchored? Anchored simply means that this is the highest probable area that the charts, the algorithms that drive these charts, have decided are significant, and those areas are where you should expect buyers to show up in the case of support, or sellers to appear in the case of resistance. Here's the supports, right? That's where you should see significant selling in this case, buying in this case. So that gives you a place to measure when prices either move into, or in the case of going higher, or pull back and move into on the case of support. Does it mean you automatically buy there? Well, no, not necessarily, but it does mean that's where you should expect the buyers to surface. Price discovery is all about test. Tests typically take place in those areas that you'll see on the NeoTA charts in terms of support and in terms of resistance. So as price moves into resistance, that's where the sellers should appear. As price moves into support, that's where the buyers should appear. If they do, then everything is doing what it should. What you're most interested in is when it doesn't do what it should. For example, let's go back to this area, and I'm going to visualize what would have been the case. This probably was resistance previously. Once price gets over resistance, as in here, then you know something is taking place. You already know the trend is bullish, reaffirmed bullish here. That's where you'd want to buy that breakout and try to ride it higher, and then take some profits somewhere higher. On the retrace case, and let's do that one, where would you expect support to be? Well, we had a nice big breakout on this bar. This whole area at that time probably was support, and so it would have been green. And as price moved into that area and tested it and was unable to break it down, that was a test. Failure to get lower gives you an indication that this particular retrace probably was not a bad place to be thinking about buying it, right? Because then you can buy at a lower price with the expectation that prices are going to move higher. So you use the support and resistance zones to tell you what should happen, and then you see if it does or if it doesn't. If you're already in a position, you want it to hold support, for example, and move higher. If you're not in a position, that might be the spot that you want to try to buy it. Now, the real power of these charts is the fact that we have multiple time frames. So if you remember up here, we were talking about daily, weekly, and monthly. If we're on the daily time frame, let's put that one up. We can see here that everything that we have at this particular point is support. We don't have any resistance up above us. So a pullback into this area would be the places on this time frame for the support to show significance. Those areas, in this case 116, 113, almost to 114, about 114, and then farther down. So we got support starting at about 116 and again at about 114. Now let's switch this to a weekly time frame. So just remember those price points, 116, 114. What do we have here? Well, the support on this one starts at about 112. So going back one more time, and I'm doing this on this particular chart because we've only got one screen to look at. The 112 area is right in here, so you can see that the primary area where you have overlap being an important constraint when you're trading, you have overlap. In other words, this is going to find significant support down in this area. So as a buyer of this particular stock, if I'm considering buying this on a intermediate term time frame or even on the daily time frame, I want to try to get as close as possible to this area because that's where I'm going to have support not only on the daily but also on the weekly that we just saw. And you could do the same thing with the monthly time frame. Now, you may think it's hard to see what those time frames look like, but actually it's pretty easy. If I hover over the Apple logo or the name, I can actually click on it and pop up the trends across all these time frames. I can see what they are, I can see where it trades and so forth in terms of the sector, in terms of the general market. That's across all time frames. I can see what trend it has and so forth. Now what I can also do is I can pop this up inside a watch list and pop up all the time frames for it. And so for convenience, I've added it to a watch list and stuck it in this watch list, just typed it in. It's here. If I click on the symbol itself, it's going to pop up all the time frames. Here's the daily, here's the weekly, right? And here's the monthly. All of them pop up simultaneously. You can arrange them on the screens anywhere you want, and then every time you want to click them and pop them up, they'll all pop up in the same place, arranged on the screens where you care to see them. And then of course, once you have them all three visible on your screen at once, you can quickly look at each of these and decide where your resistance is, where your support is, and on each time frame, so that you can make a better decision about where you want to try to buy or sell that particular stock. So that's a general introduction to the charts, to the NeoTA charts, how they work, how you can use them to your advantage. Unlike any other chart, they give you a wealth of information across all time frames, allowing you to make better decisions about when to enter and when to exit, and which direction you should be pointed.